So you are welcome back.
Yes, sir.
All right. So now I'm not putting all my technical tools on the chart yet, so that you can really understand the way we are going about the price. So like I told us, price may do two things or three things. The price may, if you want to take a zone, the price may either break above here or break below here or consolidate around here. So what we can see here, after this consolidation and under consolidation here, price broke through and price had gone through this consolidation now at this level. So you can see this level of the price. So that the price had broken through this level, you can see, and this is the engulfing candle that went right through the consolidation, the MA50. So if I'm going to now look for my entry level here, is stupid. It would be stupid of me to follow the price and say, okay, I want to sell from here, because the price is still going to do what? The price is still going to move and move up and backtrack. So this candle, it's an early indication that the price wants to do what? To pull back. That is what it is. So now, where was where did the price break? The price broke this support here. So you can see at that level of 25.84. That is what I can see here. At that level of 25.84, price broke through. And this is the candle that is going to do it for me. And this is the candle I'm looking for, that the price broke this level. So we are going to be looking for our entry around this area that was broken. Now, but that is not the closest place to this candle. Now, there's a possibility here, and that is what I want you to enter. You can now set the second entry at this level where you have this red candle here. You can see this level just above here, because price may engage and use 50 MA as a resistance. But price is not perfect. And so you must understand, at times when we give an entry here, is for you not to miss something, because price may actually backtrack from here based on the strength of this engulfing candle. Based on the strength of this engulfing candle, and not get to this level. But just know that price may just at this level of support and retest it as resistance, or price may go a little bit higher. So if you look at this level where I have this level of the wick here, and you see this wick here, this small candle, that's the nearest resistance now to it, which will be support that is now going to be tested as resistance, and it coincides with this at this level. So price may do that. Where I don't expect price to get to is that price will get to this level. I don't expect price here at all. So if I want to do anything, this is where I want to put my warning signal. I don't have to allow price to get to this point before I know that the trade is going to fail. So my warning signal is going to be like here, and you can see that it's very close. And my second entry, my first entry. Now, see where these candles are chosen to pull back at a very important word, support. Price know what it's doing. So this is the support here. You can see this level of price is at this level. So this is where the price, you can see. So I expect that, it's not yet touching that fenestrated line. So I expect the price to perform its activity, touch that level, try to break through it a bit before moving up. So you're going to see some movement that the price is going to go bearish, then pull back, and maybe by Wednesday or thereabouts, we'll continue with our selling. But you don't want to sell from here. We want to wait, and that is the right thing to do if you know what Forex is all about. So once we get to that place, this is the level that the price is going to break. Then we will now be looking at maybe my price using 200 MA as what? As a support for my TP. So the next area I want to engage as my take profit will be at this level of what? Of support. This level. So this will be the next level. So the price is going to use this as a support to pull back to this level to draw us in, and price will later go back there, break it, and use this area as what? As the next level of what? Of support, where we can TP. Whatever price action we have at this level is what we're going to do what? We are going to use to navigate if we are going to come to this level of support. If you have gotten me so far, please, I want somebody to talk that you are really getting what I'm teaching. Are you getting what I'm teaching? This is one level. Okay, this is one level of support. This is the second level of support here, and this is the third level of support here. So the price is going to engage this support level and use it as a springboard to come back here to draw us in. And I told you price may do this, get to this point. Price may do that before eventually pouring down. Price is not expected here. Price is not expected. If price gets to that point, then it has failed. So these are the things, because at times you see us, you think we don't know, we know what we are doing, but and that is the we have to look at price action at those level of entry to tell if the price is ready to go bearish or still want to go a bit up. You must know price action matters. So at this level, once we are drawing the 4-hour candle, how would it close? The manner, the way and manner the 4-hour candle will close at this level will tell if price is going to go up here to retest this area. And the way and manner it closes at this area will know if the price is going to fail or not. But we have to wait until it closes to know that, okay, what is closing here? Please let me exit. I don't even have to wait for the price to get here. Now, having said that, that is how to trade a pullback. So if I'm going to trade this pullback, those people that scalp, for instance, if I'm going to trade a pullback here, I'm going to wait for something to happen here at this level. What is the price action I'm getting? If the price action is giving me like a reversal candle or a reversal candle that tells me that they're ready to pull back, I will allow them to move. Once they move, in the next 15 minutes, I will look for my entry, enter, and exit right at the tip of that tail. Anybody that wants to trade a pullback or you are scalping, that is what to do. That is what you have to do. You have to wait until you see that, okay, there's a signal that price wants to do the pullback. So once you see that signal, you enter with it and you exit at that point, at that level. That is how to trade the pullback. And your exit will be at this level. You don't predict that the price is going to come here. The chance that the price will get here is like 5%. You must know that, but you can get there. But you know that the price will sure walk up to this zone for that pullback. So which means that even if you are scalping, what you're going to get here is not small. Let's see. If you're scalping and you're able to pick from here, if you're able to pick it, you might actually get like 60 pips to scalp to ride that pullback. You might get 60 pips. But you must be very careful also, and you must know that if you're not picked on time, just delete your trade. You have to be very careful. You must read the price action correctly. So now, like I told us, if I now bring back my drawings, bring back my drawings now. You can see my drawings, and you can see my trend. You can see my trend line here. So my trend line has been broken. The first to get broken was a trend line, and the 50 MA being broken has confirmed that we are going down. Now you can see my entry the way I explained it to you. So you can see my entry around there. This is the first entry, and the second entry is just at this point. Just like I told you, those pink lines happens to be my entry. You can see very well what I just told you. My entry 1 and my entry 2. And incidentally, this is occurring here also here at a Fibonacci level, this reaction here. But we expect that the price will still get to this point. You can see that support here, this support, the price will still get here before we have this move. And the move back up, eventually, if it's going to work like that, is going to be like at least about 55 pips. Now, with this right measurement, about 55 pips. Now, having said that, we are coming here, looking at this point has our, okay, I've not shifted it. I need to have shifted it. I need to have, shifted this level to somewhere. I will shift it later. I will shift it. That's my TP. I will shift it later. I will give the correct TP. And you can see where my red danger line is, because I don't expect price here. You can see that if I'm very close here, you can see this is where my red line is, and this is where my stop loss is. This is my stop loss, and this is where my red line is. You can see this alarm. So once price get there, it's going to alert me that close. That's the minute. So, but I don't expect price beyond this level. Okay. So, and if I want to now switch to lower time frame to see, let's look at 1 hour. So already the price is trying to consolidate on 1 hour. If you're not careful with this consolidation, you think, yeah, this is an early sign for you, on 1 hour, that the price is making an effort to do what? To go up. But with this formation of this candle, the price also is telling us that there's going to be a change soon, a change of guard soon, but they might still go a bit down before that happens, back to this level. So, and you have to look for your support 1 and 2 and 3. 1 and 2. Now, at this level now, we have this area as a support. You can see the price came back here as a support. Price is touching this area. Okay, sorry, this area. You can see support 1, support 2, support 3. So we should expect the price to come here and test this support as a resistance. That's how to think. You know, from the theory of the first level of where the thing was broken. So this is my resistance where I need an entry. This area, if the price now decide to test this area, this zone as resistance number 2, you can see this zone clearly here, just before my danger line. I carefully chose that area because price may actually walk up to this zone. You can see 1, 2, 3 here, and walk up to this zone, which is around this area, and do a resistance number 2 before going down. But it's most unlikely because my FIB 68 is here. I mean 61.8 is here. So I don't expect price to walk up that zone. But in case it happens, fine. So you might still expect a deep penetration here, but not above, beyond this red zone. Now let's take another pair. Let's take another pair and work another pair. Which one should I work on now? Can somebody just give me a pair? Give me a pair, please. Somebody should just give me a pair so that we can work on it.
USD yen.
USD
Yen.
yen. Okay, USD yen. Dollar yen.
Yeah.
USD yen.
Off it.
Okay. Now this is dollar yen. Good. This is dollar yen. Oh, this is a very good one. This is dollar yen. This is a good one. Good. Now, this is a weekly chart. Let's try to zoom out. What exactly can we see here? Below here, this zone, this pair was in a downtrend. And recently, the 50 MA had been broken. The 200 EMA has also been broken. The price went up to retest 200 MA as resistance. That is what we can see. I'm sorry, as support rather, as support. But in testing it and retesting as a support is not right directly on it. You know, the price went a bit down it before actually being stalled by 200 MA. So using it as a dynamic, you have to actually do your analysis very well, because that's like below 200 MA, that's 63 pips. So 63 pips is much. So you have to accommodate for stops like that. Now, but what we saw was that, okay, the price had been an uptrend recently to break this, and this is the candle that broke it, and the price had to come back down here, attracted back to the point of the break to retest as what? As support, the weekly support number 1. The price may come back there for support number 2 or not, and the price may just continue to go up and up. Now, looking at this price action, if you want to look at it, this was the first signal that the price, after this consolidation, that the price may change gear. And this one came in, consolidation here, and this one formed. This is another price action that the price wants to go bullish. And consolidation, eventually, they began to move and move, consolidation, and began to move and move. So these tried to break 50 MA here, and the price came back down there to now retest and broke it eventually, and this now happened. So the price now came back here. So when we saw this, these are the things that we have to learn. When we saw this, that, you know, the price, this one is not a serious price action from the bulls anyway. If you look at that, let me try to. These had shown us that they may reverse with this price action, that they may reverse, but you really have to wait to see that reversal before you say you want to trade it. You don't expect that because you have seen something that looks like a reversal, and this is, of course, still bullish, and you put your stop loss there, you want to trade here, you will lose. So we waited for a hit for this one. We felt we can still trade, but with this kind of a price action, you have to be very careful trading it. If you want to buy, you have to be very careful buying this. You can see that the wick and the head of the wick and the tail almost the same. So you want to be very careful. Not until we had this. This one formed, you can see the small head here and the long tail here. This is clearly a reversal signal or a pullback on a larger time frame. So we add that and we know we can just go ahead and continue. Now, this one, this week, forming here, it was because this one was also forming on, I want you to watch something. This one was forming on the 200 MA, number one. Number two, the position of the tail is not up here. If the head had come down here and the tail was supposed to be up here, then I would say that this might mean continuation to break this 200 MA further down. I started with that. For reversal, you can understand because the bulls were pushing that were in control. They pushed this one, but they dominated. With a small head, that is clearly a reversal. But when you get to this point, it's still a reversal, though it's bearish in color. If the tail were to be up here and the head was to be down, then it's a continuation downward. You must understand that. So spotting this reversal, and we thought that it was going to go a bit down to get to TP around. I must have used one, around this area, this zone here, to TP, but I think it didn't get there and it failed. So it didn't get there, it failed. And the bulls now took over. Now this is clearly a reversal, sorry, a continuation. They are now going back being bullish. They're going back being bullish now. So it is, if you now want to, these are the things that you have to correct your trend line. If you draw your trend line and it went through like this to get to this point, after a deep correction, this is a correction. It's not a pullback. It's a pullback on a larger time frame is a correction. So let's understand it that way. A pullback on a larger time frame is a correction. And how do we differentiate correction from a pullback normally? In a pullback on a lower time frame, 4-hour time frame, if you are pulling back from the point of pullback, you must not do beyond 61.8 fib. Most of the time, you can do 23, 38, you can do 50. And you can even touch on 61 and go back. But once you go below 61, that is a deep correction. And most likely it will touch 78 and it will touch 100. And that is a correction. That's a deep correction. So in this case, a correction on that time frame, and it's not a pullback, is a correction. These ones are pullback, these ones are pullback, these ones are pullback, these ones are pullback. But this one is a reversal, which is a correction. It doesn't mean that the trend has changed. So if one is not careful and you don't know what you are dealing with, you think, okay, we are going back to sell, and you think that, okay, they're going to continue to sell and continue to move down. No, it's a deep correction. It happens from time to time. So there are people that studied wave theory, but in our own way of trying to analyze, if you use your fib once it's beyond 61.8, then know that you are going for a deep correction. Now, where do we want to see this eventually get to? We want to see this with this price action, strong bullish candle. We want to see this eventually will get to this point. The strength of the volatility we can see eventually we'll get to this point where price will come back here. Maybe in the next 2 weeks or thereabouts. In the next 2 or 3 weeks, price will come back to this point with this move. Now, on the weekly time frame, like I told you, our stop loss should be below here, but it's going to get a bit up when we just a rough an idea. Our stop loss cannot be more than 107,688, and we are looking at TP that will get to this point based on this volatility, at least at that level. I still expect that it will take the tip of this bearish candle. Okay, now having ascertained that, let's now go to daily candle to study our entry. Now, this is a daily candle. What do we see here? We missed something here. We missed something here. The consolidation here occurred, and the price was not going anywhere. And this tip was supposed to be our stop loss if we had seen it. And this is the bullish candle. This is the engulfing candle that broke. There is a fake breakout. Below the 50 EMA on the daily time frame here by these 3 candles, but eventually this candle came back there as a bullish candle to break above it, and the 50 EMA now is being tested at this area as what as support after this breakout here. Now, if you had wanted to enter this trade, looking at this bullish candle, the nearest resistance to it or support, resistance to it is the tip of this candle here. If you look at it, if you put it there, yeah, that would have been a perfect area to enter. And you can see still the tail of this bullish candle came back to pick you. So that would have been a nearest place to enter. We have lost that. We have lost that move, and we have to look for another way, another place to now enter. That area at the tip here is the first pullback, and consigned with the support, the cluster of support around this area you can see on the daily time frame. Now, looking at this price action, the price action here means continuation, and it means also that the bears try to pull back from this level and to achieve what they achieved here. Now, look at this. This is going to be a continuation to the upside. Like we said, we are interpreting this candle now. It's a price action that tells us reversal. But in this kind of a reversal, it's going to be a pullback to find another entry to continue to move up. That is what I can say here. If this tail were to be up here, it will mean another thing entirely. So they cannot change the direction for now. If the tail has been up here and the head has been down here, what I would say imminent change of direction. But because we add this, of course, it's a reversed hammer, but the bulls were pushing it from here in their direction. It's going to be a continuation, but at the same time, the price will not just continue. The price is going to go back down a bit, probably to this level here, probably to that level here, which is at that level of price may fail at that level really at 108.37. It's possible, or near here around this area. Look at the head of where you have this red candle, the tip of the red candle here will be the next place that you can think of, which is around 109.088. That is where I want to bank. That is the area I want to bank. That area is where I want to bank on the daily candle. We're just using the candle formation, and the mood of this candle is that it's going to be a pullback and a continuation. That is the mood. That is what I can see. Now, let's look at the 4-hour candle. See, we are plotting entry. We are looking at what is possible based on price action. Now, this is what we have. This is now clearly in an uptrend. Price at broken well above this area and this area. And for anybody that was in doubt of what the price was doing with this formation, this is clearly telling us that you can see. There was one video I sent to you that you watched one time. You can't see this and you think this is not bearish, this is bullish. So you can see it's bullish and it's going to continue. So it's bullish. Now, our area of entry now, we have to look at this bullish candle to plot our area of entry. And our area of entry will look at these candles here, these candles, this week here, 1, 2, 3, to plot our entry. So our entry, decent entry will be around this area, 10979. That will be a decent entry, 10979. And just like I told you, with that, price may also get to this point, close to the body here. Price may get to this point here on the 4 hour, which is 108,981. You don't want to bank on that. What is almost sure is for the price to still do this. This one may happen, is not sure. I've seen it happen, but it's not sure. What is the high probability is that we are going to have a pullback to this point. And where you don't want anything to happen is at this level. This is where our warning sign will be. I don't expect price in this area. And my stop loss is going to be around this area. Chicken, that is how to do it. Below this week, around this area, my warning sign is coming here. The warning signal is coming out right in that area. Now, you want to trade a pullback from here. For those who want to scalp, this is 4 hour candle for you. You have to wait until you see a reversed hammer or something on 1 hour time frame. You need the 1 hour time frame to tell you, you see a reversed hammer on that 1 hour time frame that, okay, the price is ready to go down, to go back down. Then you follow the price, you exit at the fringe of the week. That is where to exit. And where do I expect this to actually happen? The move to occur, we have to look for an area of resistance that the price is going to be sent down. Maybe this is this area. Price may be sent down this area, price may go down, or at this level where you have this, look at this candle here, this doji candle here. This doji candle here, look at this candle here, this doji. So this is where we can expect something to happen at this level. Price may use that as resistance here and support here to move down for a retest. Let me try to. We might be expecting that to happen around 109,600. Price may go up, may to now effect that retest, to move back down here at after 109,600. But wait to see. Now let's switch to our tools and let's see what we have. Now that's our tool here. Now the trend line had been broken, so you can see the trend line had been broken here. So it was in a downtrend to do that correction, and it's correction indeed. So you can see that from here, when price moved from this level, this is a movement. Price came back down here, breaking this level to retest this area. From this area to this area was an impulsive movement, and that is a fib of 100. So we now have a fib retracement of 25, 23, 38, 50, 61, 78, and this is 100. But because it was a deep correction, the price altered at 50. So we didn't see that. This is not a change of trend. It was just a deep correction and a pullback, which is a deep deep correction. So which you can anticipate it may happen anytime. And the first thing that will tell you that is going to happen if the price begins to cross below your 23 fib, that is when you begin to see that this thing is going to go a bit down, and it even went below both 200 MA and 50 MA, and you think that they are going further down, but eventually it failed. At this point, it crossed your it crossed the 50 MA here, crossed 200 MA here, and to finish the correction. So before going back up. Now, where do we expect the price? We expect the price in this area, like I told us. The price now, is it that the price now formed a double top to say that it's going to go down? Or it breaks this level? Don't move ahead and say you are having your TP above this level. We are still going to maintain our TP around this zone. That is the most reasonable thing to do. Now, so like I told us, we are using this area as our entry point, this area as our entry point. I'm going to correct that. It can't get lower than that. It's better here. Yeah. So our entry point is going to be in this area. We may place the second entry around this area or this area. You know, I was doing some stuff thinking that because yen is going to be powerful, yen is going to go strong next week, because we are going to be trading some yen pairs, because yen also is powerful. It's going to actually throw some force, and if that happens, we might see a deeper movement from UJ. It might actually get to this level, but not be beyond this level. It might get to this point. It might get to this point and do the second support before going up. It is not impossible. But what is safe is that you can see support here, we can see resistance here, and we can see resistance here and resistance here. So is technically we'll see this level as a level of resistance. So when you see that the price is falling deep, just know that it can happen and get to this point before going back up. So for some people that will have, doctor, check something. I need to let you see what happens at times. Price may actually beyond this level and beyond this level, then it will consider that as if the trade has failed. If the price should move below 50 MA at this stage. So this is just below 50 MA, and I don't expect price beyond this area. So we can later correct our or modify our stop loss later. So, and this is where we expect to find our TP, which is about over about 140 pips or thereabouts, and is attainable because we are trading along the trend. So after this correction, they are going to go up after this correction. The worst case scenario is for price to want to do a double bottom here before springing up. That is possible. And that is why it's Forex. That is why it's Forex. The price may do a second support here. It may do a double bottom before springing up. It is possible. It's all possible. These are possible scenarios. But of course, we don't want to stay in the market. We want to exit and wait for that to happen before joining it. So we may close, but with this trend and momentum, this is what we should expect. Price to get here, pick this level, and go back up. Do anybody have questions? Now, one thing I'm going to tell us again, see, On the DX, let's look at DXY before I entertain your question. Let's look at the DXY. Since we're dealing with dollar pairs, let's look at DXY. It's a bit tricky. Going into next week, some of our good trades is going to be the ones we had running. Then the card pair and the yen pair, they're going to be very good. Dollar pair is going to be a bit tricky. And that is why we're not going too deep into taking profits. So our take profit will be short. You know, we might just be doing like 100 pips and none of that. We won't be doing like 200, 300 pips. We'll wait until we see the next price action before we go, you know, further with USD pairs. Why? Now, let me switch to